Dabur just reported its numbers and it was a good set. So let's decode that with Mr. Ankush Jain, the CFO at Dabur India, joining us. Ankush, hi, good to be speaking with you. Well, it's after a couple of years that we have finally seen the volume figure of 5% because the last time it happened, it was in Q1 FY23. But now can we probably say that this is going to be a sustainable rate?
Yeah, hi. Good afternoon to you and all your viewers. First of all, before I go directly to volume, bit of a context. Our top line increased by 7%, as you know. Our operating margin by 8.3, and this was, as you rightly said, backed up by almost 5.2% of India volume increase. And this, has been almost, even last quarter. So sequentially, we have been seeing an increase in volume uptick since last 2-3 quarters. And we believe now that with the rural economy, showing some signs of gradual improvement and outpacing the urban demand as well, which augurs well for us. And therefore, we think this should be sustainable. And, it should even become slightly better even in H2. So we are positive and optimistic, based on the rural, expansion which we are seeing currently.
The way things stand right now, would it be too hopeful or would it be realistic to expect that exit rate for FY25 could be perhaps double-digit volume growth?
I won't be able to comment on the full year numbers at this point of time, but we can say that at least, mid to high single digit we are aspiring for, and that looks achievable because we are seeing traction, especially in rural, economy, as I said earlier. So even we saw, the rural economy grew almost 250 bits higher than urban, and even last quarter it was 100 bits higher. So sequentially it is better. Even for us, we are higher, and therefore we think that double digit. I'm not sure if I can comment or, but mid to high single digit. That's what our aspiration is.
Take that mid to high single digit aspiration, but the fact that you talked about that rural growth has outpaced the urban demand by as much as 350 basis points. Going forward, do you see an expansion of this number that the rural will continue to outpace and by a bigger margin? Or do you anticipate that urban might also catch up? What's the way forward with respect to the rural versus urban divide and spend scenario?
For H2 especially, when the government has rolled out so many incentives and also increased its allocation to rural development plus infrastructure and cap. So there will be some lag impact as well, and obviously with the multiplier impact. So that should go better for rural than urban, at least for H2, we think. And the gap, which is 350, can marginally improve from here on. By the end of the year.
Something which is positive, augurs well for the entire country. But the margin performance is quite commendable, 19.5%. And in the quarter gone by, you had laid out how 20% is the long-term target. Now, given the fact that you've already achieved close to that, are you looking at perhaps upping the target? Are you now looking at targeting 21, 22? What's the way forward on the margin front, given the operating leverage will also kick in?
Correct. So in terms of operating margin, while we mentioned that we will be marginally increasing our operating margin this year by 25 to 30 bips or thereabouts, but it also depends on the gross margin expansion. We think that the gross margin expansion will increase at least in Q1 and part in H2 as well. But as a strategy, we would want to redeploy significant part of it back into advertisement to generate demand, and to develop more categories. You also know that we are entering newer and newer categories, newer and newer variants, increasing our addressable market. So that also needs a bit of investment. Secondly, we also are investing ahead of the curve in terms of our sales team infrastructure, getting into more and more villages, getting more and more stockists, and also, infrastructure and IT developments. So a part of this will be redeployed for building future capabilities and developing newer products and sales infrastructure.
So you're investing for growth as well, but talking about investing because to fuel growth, are you able to increase your market share? Because I was just going through the toothpaste segment, you've managed to deliver a growth of 12% in that. In fact, other peers of yours, the likes of Colgate, etc., also talked about a double-digit growth. Wanted to understand what kind of growth rate should we expect in this segment, and have you managed to gain market share there?
Yeah. So first of all, specific on toothpaste, while almost every player has grown by 10 to 12%, and likewise but our gain, we have actually gained market share in red toothpaste, which is our power brand or a main brand for the company, and we continue to gain market shares. Even we have gained 90%, in 90% of our product portfolio combination, we have gained market share, which means there are strategy of driving awareness and availability and increasing expansion is working pretty fine. Now going forward, our aspiration is always to grow ahead of the category and thereby increase our market share positions, either strengthen them wherever we are market leaders, for example, Chyawanprash, honey, juices, mosquito repellents, and also wherever we are either challengers or number two or number three players, increase our market share anyways to bridge the gap. So focus is very clear: increase in market share and grow ahead of the category.
Ankush, what's been the impact as far as the spices category is concerned? Because the last few months haven't been very kind with respect to the headlines that we have been getting for the spices segment, both in terms of the international exports as well as the domestic consumption. How have things moved there? And have you seen a bit of a drop perhaps in demand, international or domestic?
Yeah, in fact, the spices category we entered only last year, so we are not a very significant player. But having said that, it augurs well for us because we have seen our increase in market share. Our growth has been in high teens, and this is by the fact that we are also synergizing it with Dabur ecosystem. So there is a lot of headroom for us to grow. While there may be some bit of pressure at the category level, but I think we have a lot of headroom, as I said, because we are operating in only two geographies. We can expand it to other neighboring geographies like Central India, North India, part of South India as well. So for us, I think it's only a growth engine for us as of now.
Ankush, before I let you go, because the numbers for Adani Enterprises are also coming in, just the last question as far as the price hikes are concerned, because you did allude to the fact that there is a room on the upside for gross margins, even though you're looking at deploying it back. This expansion in gross margins will come in from price hikes, or is it the fact that the raw material prices have stabilized a bit?
Yeah, so I think in H1 we have seen a bit of deflation, and that is aiding the price. That is aiding the gross margin expansion. Plus, there are some rollover of price increases which would have taken in last 1 year or so. Even in Q2, we expect some bit of deflation and rollover of price increases. So gross margins at least should expand. However, the initial indications are that with WPI and CPI increasing, the inflationary pressure or the deflationary situation may ease, and it may actually lead to a bit of inflation, especially from H2. But then, as an organization, we do a lot of value optimization, a lot of value engineering, a lot of process efficiencies, etc. So that should aid in bridging the gap and helping us at least maintain or grow the margins, if at all. Yeah.
Ankush, on that note, we'll let you go. Appreciate you making time and speaking with us. So that's the management of Dabur, quite hopeful about the rural recovery in the second half of the year and expecting at least mid to high single-digit volume growth with the possibility of expansion in terms of gross margin, even though they're looking at gaining the market share and redeploying it for growth as well.